Good evening, students. Welcome to the session. I hope you have revised the last topic, what we have done. So we were doing the assessment procedure last time, and I had started with 143, and then we had even done 142, right? So we'll just quickly revise because the link has to be established. Yes, good evening, Viraj. So we'll just quickly revise what we have done so far, and then we will proceed on to the rest of the areas of this assessment procedure. Okay. So we had done first the return filing part. The return filing we had done under 139. Before that, we had done the requirement of obtaining PAN and Aadhaar under 139A. The PAN and Aadhaar needs to be obtained. Okay. And then we had seen the return filing requirements. What are the return filing requirements? What is the normal return? What is the belated return? What is the revised return? And then we had also seen what is the updated return, right? So in this particular case, first you will obtain the PAN as we have discussed that time. Then you have to obtain link the PAN and the Aadhaar. Otherwise, there are penalties for that as well. If you do not obtain PAN or the Aadhaar, then there are penalties relating to that as well. And then we had also seen the assessment procedure. Under the assessment procedure, we had started with section 143. And before that, yes, of course, we had also done e-verification scheme as well, that the AO first can initiate the e-verification scheme. First the summary assessment, then the e-verification we had done, and then we had proceeded towards the normal scrutiny assessment under 143.2. Okay. Now, before we start off with the balance topic, again, I'm moving first towards the 143.2 part, right? So what we had done is that if the AO considers that the assessee has understated the income, computed the excessive loss, or has underpaid the tax, then in that particular case, the time limit for the issuance of the notice is 3 months from the end of the financial year in which the return of income is furnished. The AO can issue the notice under section 143.2, and the assessment can be completed within 9 months from the relevant AY. And for the updated return, it is 9 months from the end of the financial year in which return is furnished. For the TP cases, 21 months is the time limit. And then we had seen that the AO has the power to call for the information by issuing the notice under section 142.1, or he can call for the information under 133, 133A, 133C. And we had seen he can make a reference to the valuation officer, or he can also direct for the special audit, right? Now, also, while we are dealing with these particular cases of issuing the notice under 142.1, calling for the information, which is the power of the AO basically. Also, I would like to here point out the penalties in linkage with this. Because if you remember the penalties separately, it will be difficult for you to remember. So what if the response is not given to the notice reply, or reply is not given to the notice, or what if the special audit is not carried out? What are the consequences in relation to that? So that's what we are first going to see, and then we are going to proceed further. Okay, so we were on 143.2. Now, if the 143.2 is issued, the AO, as I said, has the power to call for any of the information, right? He has the power to call for the information. And while he is calling for the information, he would issue the notice under section 142.1. Now, under 142.1, if the AO is issuing you the notice, and in case you fail to comply with the notice under section 142.1, then the penalty could be penalty is given under section 272A 1D. Penalty is given under section 272A 1D, which is in the case where you fail to comply with the notice of the AO issued under section 142. And what is the penalty? The penalty is rupees 10,000. So 172A1D, if you fail to comply with the notice under 142.1, then the penalty would be 10,000. So if you fail to comply with the notice issued under section 142.1, then the penalty would, in that particular case, 10,000 rupees for the default. Similarly, if you fail to comply with the notice issued under section 143.2 as well, then also the penalty would be penalty under section same 272A1D. The penalty in that case would be rupees 10,000. Are we clear? Further, there may be the prosecution as well. There may be the prosecution also in case the offense is of the higher nature, right? In case the assessee is a defaulter, then in that particular case, the prosecution can also be launched. And what is the prosecution? So if a person fails to produce any documents or any books of accounts as are required by him by serving the notice under section 142.1 willfully, then he shall be punishable with the imprisonment of 1 year with the fine. So prosecution under section 276D, which is imprisonment of 1 year plus fine. Imprisonment of 1 year plus fine. What is the notice under section 142.1 for? It is for the calling for the accounts information, or here you can also write information, books of accounts, documents, balance sheet, statement of asset and liability. Notice under section 142.1 can be issued. It can also be issued for filing the return of income in case the return has not been filed by assessee. So here you can make it like this. Notice under section 142.1, file return of income if ROI is not filed, calling for information, documents, books of accounts, or statement of asset and liability. Are we clear? So there is the penalty plus prosecution which is there in case you fail to comply with the notice issued under section 142.1. Are we clear? Any doubt? Yes. Then, as I said, the AO can call for the information under section 133A, 133C. If you remember, we had done here that there is a power to the assessing officer to call for information under 133. 133A is survey and 133B and 133C. Now, here if you see that the AO is having these kind of power, which is what we are going to discuss elaborately in today's class, even the survey and the search. Now, first of all, 133. This we have not discussed elaborately. So now that we are going to consider this. So now if the AO calls for the information under section 133. Are we clear? So then the assessee needs to provide that particular information. The assessee is bound to provide these kind of information to the AO when the AO call for these kind of information, right? So under the 133, the power can be exercised by the AO, by the DCIT appeals, by the Joint Commissioner, by the Commissioner appeals, right? Even if there is no proceeding which is pending, the power can be exercised, but it can be only exercised by the authority which is not below the rank of the director or commissioner or principal director or principal commissioner. Are we clear? So he can call for the information from the, let's say, firm in respect of the partners. He can call for the information from the HUF in respect of the Karta and respect of the members of the HUF, from the trustees, from the guardians, from any other assessee with regard to the name and address of the person to whom the payments are being made exceeding 1,000 in respect of rents, salaries. These kind of information the AO may call for under section 133. And in case there is a failure to furnish this information which is called, then there will be again penalty under section 272 A 2C. Then what is the penalty? Under 272A again, there will be a penalty in case the assessee fails to furnish the information. And what is the amount of penalty? The amount of penalty is ₹100 per day. So, ₹100 per day for the failure. So in case the assessee fails to furnish any response to the information being called by the AO, then in that particular case, there will be the penalty which will be levied on the assessee. So if he fails to furnish any statements called for or any information, then in that case, there will be a penalty of, the penalty is not 100, 500 per day. Yes, the penalty is 500 and not 100, Yeah. Okay. The next power is the survey under section 133A. Now, what are the powers of survey? Let's try and understand. Under section 133A. Now, the AO can conduct 3 kinds of survey. One is in respect of specific business place or the place where activity of charitable purposes being carried on, right? So he can either survey the specific place of business or he can survey the place where the activity of the charitable purpose is being carried on. Place where activity of charitable purpose is being carried on. Or he could also survey in connection with the function or occasion. Connection with function or occasion. So These are the three kinds of survey the AO can carry out. Now, in case the AO is carrying out the survey of the place of business under 133A. Under 133A, he can carry out the survey as I said. So he can enter the place within his jurisdiction to inspect the books of accounts, to verify the cash or the stock. So he can during the business hours he can enter the place to inspect the books of accounts. So he can inspect the books of accounts. He can, within that jurisdiction where the business activity is being carried out, or any activity for charitable purpose is being carried out, then he can ask the person who is there to give him the facility to inspect the books of accounts or the documents as he may require. He can also check or verify the cash, stock, or other valuable articles or things. So he can also check and verify cash, stock, or valuable article or thing. Then he can also call for any information as it may be useful. So he can call for any other information also. But he can do this only during the business hours which are there of that particular business. So he can only enter the particular premises to conduct the survey only during the business hours in case of the survey which is there for the specific business premise. So he can only do it where it's a place of business. He can only enter the particular premises where the business or profession is being carried out. Purpose is being carried out, then in that particular case, he can do it after sunrise and before the sunset. After sunrise and before sunset. So he can enter after the sunrise and before the sunset. He also has the power to place the identification marks on the books of accounts. He also has the power to impound and retain in his custody the books of accounts or documents for a period of 15 days. But if it is for a period of more than 15 days, then he needs the approval from the Principal Chief Commissioner or the Principal Director General. He can make an inventory of the cash, stock, or valuable article. He could record the statement of any person which may be useful or relevant to any proceeding under the Act. But the Income Tax Authority shall not impound and retain in his custody the inventory of any cash, stock, or valuable articles. He can impound and retain the books of accounts for a period of 15 days. However, he will not impound the valuable article or take the custody of any stock, cash, or any other valuable article. Also, he cannot remove from the place any cash, stock, or valuable article. He can only survey. The power in the survey is limited. So what all he can do? These are the rights. This is the time I have mentioned. So, place marks of identification on books of accounts. Impound, retain and impound the books of accounts or documents for 15 days. If beyond 15 days, approval required. Verify the cash. This okay, we have written. Verify cash, stock or valuable article or thing, but he cannot impound that. And he cannot remove cash, stock or valuable article. Require any person to furnish the information. Okay, so he can require any person to even furnish the information to him. And what are the duties of the person who is there in the office? He has to give the facility to the income tax authority for inspecting the books of accounts. He has to give whatever information they are asking. And if the assessee does not cooperate with the survey authorities, then there could be the penalties in relation to that. And what are the penalties in relation to that? What are the penalties in relation to that? That the income tax officer can then impose the penalties under the relevant section under again 272A. Okay. So the person who is there has to cooperate with the income tax authority. Are we clear? Now, understand one thing again over here. That this is the power of survey and not search. We have not yet reached the search. Search is different. Here we are talking about survey. So therefore here they can only impound the books of accounts for a period of 15 days. But they cannot go beyond that. Okay. Now understand one thing. Here there is also a provision under survey which is with regard to the TDS and TCS. Survey for verification of TDS or TCS. So the income tax authority, for the purpose of verifying the TDS or TCS, again can enter any office or place where the business or profession is being carried out, or any place in respect of which he is authorized for the purpose of this section by any other income tax authority who is assigned the area. So he could enter the premises which are within his jurisdiction, or he can also enter the premises of other jurisdiction if the other income tax authority who has the power has authorized him to do so. Now, the income tax authority can then enter the office where the business or profession is carried out after sunrise but before sunset. With respect to the TDS or TCS, he can enter the premises after sunrise but before sunset. So you can write down, with respect to the TDS, TCS verification after sunrise but before sunset. They can enter the place, and the deductor or collector who is there has to give the information to the income tax authority. Again, the income tax authority, as I said, can place the identification mark, can impound the books, can make the inventory of the cash stock, can record the statements, and he can collect the information and record the statement in connection also with any function, ceremony, or event if the income tax authority have the opinion that having regard to the nature, scale, and extent of the expenditure incurred, it is necessary to do so. Let's say, for example, if there is a marriage function which is happening, and let's say the income tax authority gets the information that this particular function which is happening, here the expenditure is, let's say, of 1 CR has been spent on that particular wedding ceremony. Now, if they are of the opinion that having regard to the nature of that particular expenditure or scale of that particular expenditure, it is necessary or expedient to conduct the survey, then they can go immediately after the event, they can make the assessment also then, after collecting the necessary evidence. Right? So, in case of survey in connection with the function or occasion, they can go at any time after the function or ceremony or event. If they are of the opinion, if they are of the opinion that having regard to the nature, scale, and extent of expenditure, it is necessary to conduct survey. Are we clear? It is necessary to conduct the survey. And then they can collect the information and record the statements of any persons concerned therein at any time after the function, ceremony, or event, but before the commencement of the assessment proceeding. Are we clear? Any questions so far? Any question? Any doubt? Soft copies can also be accepted, of course, but that depends on the nature of the business, Viraj. Okay? Okay. Then we had section 133B, which is power to collect the certain information. So we have done the survey. We had then 133B, which is power to collect the information. Under this particular section, the income tax authority may enter any building or any place at which the business or profession is carried on within its jurisdiction, or any building or place which is occupied by any person in respect of which the said authority exercises the jurisdiction for the purpose of collecting the information. The authority may then require the partner or employee or proprietor of that particular firm to furnish the information. And the income tax authority can go at this place of business only during the business hours. It cannot remove any documents, any valuable article. It can just go to collect the information. So 133B provides the income tax authority that it can go and collect the information from the taxpayers, from the particular assessee. or the place at which the business is being specifically carried out. But the AO cannot, or the income tax authority cannot impound or retain even the books of accounts. It can do so only under 133A, which is survey. 133B is a limited power to collect information. 133A is the power of survey, which is much greater power. So there it can impound the books of accounts, inspect the books of accounts, and retain it for the period of 15 days, right? But here it is just the power to collect information under 133B. Are we clear? So this is 133, which is there, is the power to call for information. He can call for the information. He will not go there and get the information. Under 133A, he is doing the survey of the premises. Where he is going, he can inspect the books of accounts. He can inspect the stock also, but he cannot impound the stock. Under 133B, he can just go and collect the information. He can just go and collect the information. Are we clear? Then we had 133C, which is verification of the information. 133C is the verification of the information. So 133B is collecting the information, and verification of information is there under 133C. Are you getting the difference between 133, 133A, 133B, and 133C? 133 is power to call the information. 133A is survey. 133B is collecting the information. I can just write it down for you here, this particular point as well. Collecting the information, place where profession is carried on. Cannot retain books of accounts. They can only go and collect the information from the place where the business or profession is being carried out. Are we clear? Under 133A, as I said, they can even impound the books of accounts, but not the other valuable articles or things. No books of accounts will be removed or retained under 133B. And under 133B, the income tax authority can go. What are the hours during which he can go? During the business hours. And in case there is non-compliance with 133B, then the penalty is under section 272AA. The penalty is given under section 272AA. And how much is the penalty? So in case the person is not cooperating and giving the information to the income tax authority, if a person fails to comply with 133B, then the penalty is 1,000 rupees. Penalty is 1,000 rupees. And 133C is the verification of the information. Now 133C enables the income tax authority to verify the information which it has, which may be useful for any inquiry or proceedings under the Act. So for the purpose of the verification of information, so here the income tax authority already has this information. It wants to verify this information, and in order to verify this information, it may issue a notice to the person to furnish the information or the documents which may be useful for the proceedings under the Act. So under 133C, he already has the information, but it will call for the information from the other person in order to cross-check and verify. Let's say, for example, if I have shown creditors of rupees 1 lakh. Now, how do the income tax authority verify that this particular creditors are of 1 lakh only? Then in that case, the income tax authority can issue the notice to my creditor to verify the claim. It can ask for his ledger as to how much he has shown in his books of accounts under my name in order to verify that particular information. And he can then utilize such information for the purpose of the assessment. Are we clear? Are we clear? So this is the verification of the information. Then under 134, they have the power to inspect the register of the companies. So they have the power to inspect the register of members, the register of the debenture holders of the company. They can inspect these particular register. Are we clear? Any questions, any doubt? Also, understand one thing, this calling for the information either under 133 or even under 133B, collecting the information, or verification of information under 133C. All of this will be done in a faceless manner. This will be done in a faceless manner. Are we clear? This is all under going to be the faceless mechanism. Any questions so far? Any doubt? Any questions? Yes. Okay. Then next there's one case law which I want to discuss with you, which is with regard to 133 only. So where, let's say, for example, no proceeding is pending against the person. Can the assessing officer call for information under section 133(6), which is useful or relevant to any inquiry, but the proceedings are not pending? So can he call for the information under 133(6), which may be relevant to any inquiry with the permission of the director or commissioner? So what does 133 provides that? 133 provides the opportunity to collect the information or to call for basically information. The assessing officer or the income tax authority which is empowered for collecting the information may require any person to furnish the information in relation to any points or matters, or to furnish the statement of accounts if it is relevant or it will be useful for any inquiry or proceeding under this Act. It can even ask a bank to furnish the information. So in this case, the Supreme Court in the case of Kathirur Service Cooperative Bank Limited had held that the assessing officer has been empowered to call for any information which will be relevant to any inquiry or proceeding under the Income Tax Act. However, if no proceeding is pending, then it can be only done with the approval of the principal director or director or principal commissioner or commissioner. So it can be done, but it has to be with the approval even if no proceeding is pending. This case law has been given in your module, Kathirur Service Cooperative Bank Limited. So you can just write it down over here. Under 133, information can be called even if no proceeding is pending with the approval of director or the principal director or principal commissioner, PCIT or CIT. You can write the name of the case, Kathirur Service Cooperative Bank Limited. Supreme Court. Okay. Are we clear? Any doubt, any questions? Any questions so far? Okay. Now we are only left with search, which is what we'll be dealing later on once we complete the reassessment part. I've just completed the everything else, which is with respect to the powers of the income tax authority. Are we clear? So again, I'm just repeating for the sake of understanding how did we start with the chapter. See, I have not started with like the chapter wise, that income tax authority, then move to assessment procedure. No. How I have done it is that first we have gone to the PAN requirements. First, we saw who is required to apply for the PAN, right? There were list of the person who are required to apply for the PAN, right? That we have seen it. So we'll just quickly go through so that you are able to correlate it. So first we have gone through the PAN requirements. For the PAN, who is required to obtain the PAN? Here we had seen that under 139A. Then we had seen the amendment over there as well, who is required to apply for the PAN. And then for which transaction PAN is duly, PAN is to be quoted duly. So all those transactions we have again dealt with. Then we have covered the Aadhaar requirements, who is required to obtain the Aadhaar and mandatory quoting of the Aadhaar number, right? So that also we have done it. Now, in case you are not quoting the PAN, then the penalty also we have seen it, which is rupees 10,000. So penalty for not quoting the PAN or quoting the wrong PAN, then in that case, the penalty we have discussed is rupees 10,000. Also, we have seen what are the consequences if you do not link the PAN with the Aadhaar. In case you do not link the PAN with the Aadhaar, then in that case, it will be deemed that you have not obtained the PAN and your income tax return will not be processed. You will not be able to file your income tax return. Your assessment proceedings cannot be carried forward. So all of these consequences also we saw in case the Aadhaar and the PAN is not linked. Okay. To whom PAN and Aadhaar is not applicable, that also we have seen. Then we have done the return filing requirements. We had seen the return filing requirements for the normal return, who is required to file the normal return of income. Then we had seen the belated return, and then we had seen the updated return. Also, one more thing, under the PAN, there's one case law which I would like to discuss just now only, since we have come on to the PAN requirement. So the question is, this was very important judgment. The question was that if, let's say, the PAN requirement suggests that the PAN is required to be obtained in case the person's income exceeds the basic exemption limit. So what does it say? Every person, if his total income or the total income of any other person in respect of which he is assessable exceeds the maximum amount which is not chargeable to tax. So therefore, the question which arises is that if the income does not exceed maximum amount which is not chargeable to income tax, I will not be required to obtain the PAN. Clear? But if I am not obtaining the PAN, under the provisions of the TDS, there is section 206AA, which is there, which provides that in case you do not furnish the PAN, TDS will be deducted at the higher rate of 20%. So in case I do not obtain the PAN, 206AA will be applicable, right? Also, when the person does not have the income exceeding the basic exemption limit, he is required to file form 15G or 15H. Now again for 15G, 15H, PAN is required. So one point you are saying that the PAN is not required if my income does not exceed the basic exemption limit. Secondly, if you are saying that if I do not furnish PAN, then 206AA will be applicable. Even for 197A, for furnishing the lower deduction or for obtaining the lower deduction or nil deduction certificate or furnishing form 15G, 15H, I will have to give the PAN. So there is the dichotomy which exists, right? Especially there was one senior citizen, Kausalya Bai, wherein she made the appeal on the similar point. Now, I'm not required to obtain PAN, but the banks are insisting, otherwise they are saying that we would be deducting the tax at much higher rate. So the Karnataka High Court had the occasion to deal with this particular issue. And Karnataka High Court in that case held that the PAN is not required or section 206AA will not apply in that particular case, where the assessee was not required to obtain the PAN. But it was mandated to him that, or she was mandated to obtain PAN just because the TDS will be deducted at the higher rate if she does not furnish the PAN. So therefore, in order to resolve that kind of dichotomy, the Karnataka High Court gave this particular judgment in the context of that if there is person who is not required to obtain PAN, 206AA will not be applicable in that particular case. Are we clear? Any doubt? So that was in the context of Kausalya Bai. That is a Karnataka High Court judgment. Clear? Any questions? Any doubt? Any doubt? Okay. So shall we proceed further then? Yes, any questions? Okay. Now, red case, Viraj, I didn't get it. Which section, under which section red is conducted? I didn't get your question. Exactly what you are asking? Yes. So we had seen then the return filing requirements. After the return filing requirements, we had seen the new concept of the updated return. In case you are required to file the updated return, then by which time period you will be required to do that and how much will be the additional tax which you will be required to pay. So all that we have clearly seen it. Okay. Now, the next part is again we are going back to 143.2. We are going back to 143.2. Okay. So 143.2. One second. Yes. Okay. Yes. So 143.2 we have written over here. So now for 143.2, as I said, the assessment proceedings begin at 143.2. 143.1 was the summary assessment, and then in that particular case, your just arithmetical accuracy, mismatch with the audit report, all that is just checked. In case there is some information reported in the annual information statement or statement of financial transaction, then in that particular case, the e-verification scheme can be used by which the show cause notice would be sent to you. as to why there is discrepancy between the information which is reported and the information which is given by you. And if the income is not being offered by you, but the banks or the other deductor or collector has given your information, and you have not offered that particular income, so the department can ask you this question and you need to give that particular information. Are we clear? So that was the e-verification scheme, what we had seen. Now coming to 143.2. Now if 143.2 is issued, why 143.2 can be issued is that if the AO has is forming the opinion that if the AO considers that the assessee has understated the income, computed the excessive loss, or underpaid the tax, right? And then we had seen the powers which are there. Fine, is that clear? So 142.1 is the notice which is there calling for information or requiring you to file your return of income. Now, let's say for example, when the 142.1 notice is issued, there you have to give the information which is called for, or the AO can also request for the special audit looking into the voluminous transaction, looking into the nature or complexity of the accounts. He can also ask you or direct you to go for 142 special audit, right? And this can be done with the approval of the higher authorities. Opportunity of being heard will be provided to the assessee before giving the directions for the special audit. Maybe you can write this point here. Here you can write it. Opportunity of being heard to be granted. Opportunity of being heard to be granted, right? So in case the AO requests or directs for the special audit, then the assessee is to be given this opportunity of being heard, otherwise it will become invalid. Okay. So 142.2a special audit, and in case the assessee fails to get it audited, then in that particular case, what will happen is the income tax officer can make the best judgment assessment. What is best judgment assessment? We'll see it in a while. But he can make the best judgment assessment in case the assessee fails to comply with the directions of the special audit. Are we clear? Plus, there could be the penal consequences as well for the special audit. Okay. In case the assessee fails to get the special audit done. Are we clear? Now, with regard to the special audit, there is one more point what you should be noting here is that the time limit which is there, the report of the auditor after conducting the audit must be furnished to the AO within the period which is specified by the AO while passing the order for 142.2a. The period, however, cannot exceed 180 days. The period cannot exceed 180 days. You can write it here. Time limit maximum 180 days. Time limit is maximum 180 days. Okay. In case the special audit has been requested, so the maximum time limit should be 180 days. Clear? Any doubt so far? Yes. Any questions? Okay. And in case you fail to comply with the notice of the directions issued under 142.2a, then there will be penalty imposable by the income tax authority under 272a, which is 10,000 rupees. So what is the penalty? Under section 272a, which is rupees 10,000. So similarly, like we have the penalty under 142.1, 143.2, here also we have the penalty which is 10,000 rupees. Clear? Then one more thing which is important over here is the reference to the valuation officer. The income tax authority can make a reference to the valuation officer for the purpose of determining the FMV of the asset, property or investment. Again, here the time limit is 6 months. The time limit is 6 months. Within 6 months from the date of the reference or from the month of the reference, this should be done. And if the assessee again here does not cooperate, then the best judgment assessment can be carried out. Failure of assessee to cooperate. Best judgment assessment under 144. So under 142A, the reference can be made to the valuation officer. And the time period is 6 months from the end of the month in which the reference is being made. Okay. Then here also, under 142.2A special audit also write about the prosecution. Here there could be prosecution as well. Prosecution under section 276D. Prosecution under section 276D can also be there. In case these special audit directions are not complied with. And what is the prosecution which is there under 276D? So in case there is failure to comply with the directions, then the imprisonment of 1 year and the fine, which was also there for 142.1. So 1 year imprisonment plus fine. Are we clear? So this is prosecution. Okay. Now moving towards the time limit for completion of the assessment. That we have already done. The time limit is given under section 153, which is 9 months from the end of the month. 9 months from the end of the assessment year, relevant assessment year, you have to complete the assessment, right? So for the updated return, it is 9 months from the end of the financial year in which return is furnished. Fine. Now, moving towards the best judgment assessment. All that while we have been talking about that in case the assessee does not comply with the 142.1, or in case the assessee does not comply with 142.2A special audit, or he does not comply with the reference made to the valuation officer, he does not cooperate, then also the best judgment assessment will be made. But what is best judgment assessment? Let's try and understand. Okay, so that is given under section 144. Best judgment assessment. Under section 144. Now, what does section 144 talks about? So, best judgment assessment means that in case the assessee fails to comply with the directions or he does not cooperate with the income tax authorities, then in that particular case, the best judgment assessment can be carried out under section 144. So, whenever there are following defaults on the part of the assessee, that is failure to furnish return of income under section 139(1), 139(4), or 139(5). So whenever there is failure to furnish the return of income by the assessee under section 139(4) or 139(5) or 139(1), right? So in that particular case, the income tax officer can do the best judgment assessment. So best judgment assessment means that he can judge the income based on his information or based on the information that he has, because the assessee has not provided the correct information. Now, this year onwards, even the updated return will also be included, or 139(8), because that 139(8)(8), sorry, because that has also been included. So if the assessee fails to furnish the return under 139(1), 139(4), or revised return under 139(5), or updated return under 139(8)(a), the best judgment assessment can be carried out. Are we clear? Best judgment assessment can be carried out in that particular case. Also, what are the other defaults? Failure to comply with notice issued under section 142(1). So that's what we saw. If there is a failure to comply with the notice issued under section 142(1), in this particular case, where there was a failure to comply with the notice, here also the best judgment assessment can be made. Best judgment assessment under section 144 can be made. Or where there is a failure to comply with the directions of special audit. So, failure to comply with directions of special audit under section 142(2)(a), where the assessee fails to comply with the directions of 142(2)(a, then also the best judgment assessment can be made. Okay. Then, failure to comply with notice under section 143(2). So if the assessee fails to comply with the notice issued under section 143(2), then also the best judgment assessment can be made on the assessee under section 144. So failure to comply with the notice issued under section 143(2), failure to comply with the directions under 142(2)(a, or failure to file the return of income under 139 or 139(1), 4, 5, or updated return, then in that particular case, the best judgment assessment will be done on the assessee after taking into account all the material which the AO has, and after giving the assessee an opportunity of being heard, he will make the assessment of the total income or loss to the best of his judgment and determine the tax payable. Are we clear? So this is what the best judgment assessment is. Clear? Okay. So 143(2) assessment, which is the normal assessment, in case the assessee fails to comply with the notice under 142(1) or special audit, or for valuation, or for 143(2) itself, then in that particular case, the assessment can be made under section 144 based on the judgment of the assessing officer, because the assessee is not cooperating. Are we clear? Otherwise, if the notice is issued under section 143.2, the assessment will be made under section 143.3. So here, assessment is made under section 143.3. Are we clear? Otherwise, the assessment is made under section 143.3. Now, if the assessment is made under section 143.3, that is the normal assessment with what we are talking about. Now, one important point which I would like to discuss now under 143.3, which is the normal assessment or regular or scrutiny assessment, as you may call it. So here, in cases of the research association, news agency, or the associations which are exempt under section 1023, they are required to file the return of income, right? They are obligated. If you remember, we had seen 139(4), 4A, 4B, 4C, all of these provisions we had seen. They were obligated to file the return of income. Now, in these cases, the AO cannot make an assessment directly denying the exemption under section 10 without first intimating the central government or the authority that the approval which has been granted to them should be withdrawn, or they have contravened the provisions of the relevant section. So they can just make a request to the central government first. The assessing officer is required to send a proposal to the central government recommending that these institutions have not complied with the provisions of section 10, and therefore the approval should be withdrawn. So it can just recommend the central government, but it directly cannot deny the exemption without first obtaining the approval from the central government. Unless the central government has withdrawn the approval, the AO cannot make an assessment denying the exemption under section 10. In respect of the trust or institutions which have got the exemption under 1023C or section 11, if these institutions have committed the specified violations, you will learn about what are the specified violations when the charitable trust class will be taken up with you. What are the specified violations where they say the income from the property has been applied otherwise than for the objects of the trust, or where the trust income of the trust has been applied for the private religious purpose, or let's say it has been applied for a particular religious community, or where the activities of the trust are not genuine or are not in accordance with the conditions in accordance with which the registration was granted, or if they have not complied with the requirements of the law, or if they are doing the business. So in that case, the AO will first send a reference to the principal commissioner or commissioner to withdraw the approval. It will not make any assessment order without giving effect to the order of the principal commissioner who is cancelling the registration or who is refusing to cancel the registration. So AO cannot directly deny the exemption without first requesting the central government in cases where the central government has given the approval, or in cases of the trust or institutions which have exemption under 1023C or 11 without sending first the reference to the principal commissioner. AO cannot directly do that under 143.3. Are we clear? Clear? Now, this entire assessment procedure, what you saw, 143.2 issuing the notice, or the valuation, or for that matter, the special audit directions, all of these things, this is all done in a faceless manner. Now, earlier it was the possibility that you used to get a notice from the income tax officer, then you used to go to the office, submit the replies, right? Now it is no more there. Now the assessments are carried out in an entire faceless manner. It is entirely faceless. So 143.2 which you see is also issued in a faceless manner. The assessment is also completed in a faceless manner, in a faceless mechanism. Right? So now we are going to learn about how the faceless assessment works. Even the evaluation, even the inquiry is under the faceless scheme. The reference to the valuation officer, all of that, issuing the notice under 142.2, obtaining the information under 142.2, or getting the audit done, special audit done, or the valuation done, everything is in the faceless manner. But right now our focus is on the faceless assessment, how that particular thing happens. Are we right? Clear here? Any questions so far? Viraj will talk about the income tax rate. We will talk about in a while, that is the search provision, which I told you we'll cover it after 147. Clear? Okay. Yes. So now we are proceeding towards understanding the faceless assessment scheme, which is provided under section faceless assessment under section 144B. So this is the new faceless assessment scheme which has been provided under section 144B. And what this scheme talks about. Here we have the National Faceless Assessment Center as the middleman, or you can say an intermediary authority. We have the National Faceless Assessment Center. What does National Faceless Assessment Center does? So, in respect of the assessment under 143.3, the normal assessment, or even the best judgment assessment under 144, or the reassessment under 147, all of this will be done under the faceless manner. 143.3, 144, and 147. So this will be done in a faceless manner. There is National Faceless Assessment Center, NFAC. This will assign the case to a specific assessment unit through an automated allocation system or the computerized system. So it will pick up the case and assign it to the assessment unit. Assign the case to the assessment unit. Then the National Faceless Assessment Center would intimate to the assessee that his assessment would be completed as per the 144B provision, which is in the faceless manner. Now 143.2 notice or 142.1 notice call for information shall be served through the National Faceless Assessment Center. So this will issue to the assessee (143.2) or 142.1. So NFAC will first issue the notice under 143.2 or 142.1 to the assessee. Are we clear? So it will act as an intermediary. The assessee will then file the response to the notice within the due date specified, which response will then be forwarded to the assessment unit. So the assessee shall file the response and this it will forward to the assessment unit. Now, assessment unit may request for additional information or conducting the inquiry, right? For obtaining further information, further documents or evidence, or conduct the inquiry. Or assessment unit may stuck up with a query. Let's say the case is pertaining to transfer pricing. So assessment unit may seek the assistance from the technical team. So there is also a unit which is there for the technical questions. There is also a team which is there for the technical questions, which is the technical unit. So assessment team may also would want to, ask the technical unit to give the assistance in relation to, let's say, legal question, accounting, transfer pricing, forensic information, valuation, or it may would want to refer for the valuation. Then the technical unit can help. So the assessment unit, if it needs any information or if it wants any technical help, then in that case, the assessment unit can request to again NFAC for obtaining the information either from assessee or requesting the help from the technical unit. Let's say if the assessment unit needs certain information from technical unit, then NFAC will forward the request to the technical unit. Again, through the automated allocation system. So let's say it request technical assistance, then it can forward to the technical unit. Or let's say it requests information from assessee. It wants certain information from the assessee. Then NFAC will again issue, let's say 142.1 to the assessee calling for information, documents or evidence what is required by the assessment unit. And then the assessee has to file the response, which will then be again forwarded to the assessment unit. So request information from assessee, and then again it will forward it to the assessment unit. So it will act as an intermediary. Are we clear? Are we clear? In case the assessment unit wants certain information to be verified, then they also have the verification unit. So verification unit will conduct the cross-examination, will examine the books of accounts, may conduct the inquiry from the creditors or debtors, may do the examination of witness and recording of statement. So then in that case, assessment unit will request NFAC to request to the verification unit to verify the information provided by the assessee, and NFAC will forward the request to the verification unit. So this is how it is acting as a intermediary between all the units, so that the possibility of human intervention is reduced. Are we clear? So then requesting technical assistance or verification, then the information is forwarded to the verification unit. Clear? Now, let's say the report which is then received from the verification unit or technical unit, again it will be sent to the assessment unit. Let's say where the assessee fails to comply with the notice which is served under section 142.1 or 143.2, then the NFAC shall intimate such failure to the assessment unit, which shall then, after giving him the show cause notice as to why the best judgment assessment should not be done, will proceed to carry on the best judgment assessment under 144. Are we clear? So even the best judgment assessment will happen through it. So let's say if the assessee fails to respond to 142.1 or 143.2, then the AU shall send to the NFAC the show cause notice as to why best judgment assessment should not be carried out under section 144. And this will then go to the assessee. Assessee has to file the response, and then this response will again be intimated to the assessment unit. And where the assessee again fails to file any response, or if the assessment unit is not satisfied, then in that case, the assessment unit can proceed to carry on the best judgment assessment. Or let's say if it's a normal assessment, assessee files whatever response, documentation, whatever, then the assessment unit, after taking into account all the relevant material, shall prepare in writing the income or loss determination proposal. Income or loss determination proposal. Or let's make it like this, where let's say, for example, there is no variation which is prejudicial to the assessee. No variation is proposed which is prejudicial to assessee. Then in that particular case, income or loss determination proposal is prepared by the assessment unit. Right? Then it is prepared by the assessment unit. And in case there are variations which are prejudicial, there are additions made which are prejudicial to the assessee are proposed, then in that particular case, a show cause notice stating the additions to the income of the assessee and calling him as to why these additions or proposed variations should not be made will be served on the assessee. So a show cause notice will be served on the assessee. So in this particular case, show cause notice if variation prejudicial to assessee to the NFAC. Now, assessee will again file a response within the specified time and will give it to the NFAC. NFAC will then forward it to the assessment unit. And again, where the assessee fails to file the response to the notice, then the NFAC will intimate the failure of the assessee to the assessment unit. Now, in case where the assessment unit, after considering the response of the assessee, or in case the assessee fails to furnish the response, then it will prepare the income or loss determination proposal and send the same to NFAC. And upon the receipt of the income or loss determination proposal, the NFAC will convey the same to the assessment unit to prepare the draft order. Or it can also give this thing to a review unit to review the order of the assessment unit. So let's say, for example, now assessee will furnish the reply to this, or if he fails to furnish the reply, then the same will be communicated to AU. The AU will then, based on response of assessee, prepare income or loss determination proposal. Are we clear? Then after this, the NFAC will then ask the AU to prepare the draft assessment order. Now this draft assessment order can be passed on to the review unit. This can go to the review unit in order to verify the correctness of the order. The review unit will review the income or loss determination proposal. After that, it shall, or in that particular case, it shall then forward the report to the NFAC. NFAC will then review the report, give the review report to the assessment unit, which has proposed the income or loss determination proposal. And based on that, the assessment unit, after considering the review report, accept or reject the modifications proposed therein after recording the reasons and prepare a draft order. Okay, so now the draft assessment order, this will be passed to the review unit, this one. This will go to the review unit. And based on the review unit's observation, it can pass draft assessment. Now, once the draft assessment order is passed, it will be sent to the NFAC, which will again, NFAC, the assessment unit will send the draft order. And then in that particular case, the NFAC will then decide, the assessment unit, whether it can pass the final order or not. So assessment unit, after considering the review report, may either accept or reject and send the draft order to the NFAC. Are we clear? And then the NFAC shall convey to the assessment unit to pass the final assessment order. So after the draft assessment order, this will go to the NFAC, and then NFAC will direct to pass the final assessment order. And the NFAC will then direct to assessment unit to pass the final assessment order. After that, the assessment unit will pass the final assessment order, initiate the penalty proceedings, if any, and NFAC will then serve this copy of the final assessment order to the assessee. So this final assessment order will be then shared to the assessee. Are we clear? Are we clear? So what is the stage of assessment, faceless assessment? Assessee will be first, NFAC will first assign the case to AU. It will intimate to the assessee by issuing 143.2. And in case the additional information is required by the AU, then in that case, it can request to the NFAC, it will then request to the assessee. And then whatever the response assessee gives, it will pass on to the AU. In case no reply is received to 143.2 or 142.1 by the assessee, then in that particular case, the best judgment assessment can be done by the AU. In case AU needs any verification of information or technical assistance, then the NFAC can request to TU or NU. Okay. But when, let's say, for example, the best judgment assessment is done, then the show cause notice will be issued to the assessee as to why the best judgment assessment should not be done. And based on the response, the best judgment assessment will be done or not. And in case there is variation which is proposed to the assessee, which is prejudicial to the assessee, then a show cause is issued to the assessee. These are additions which are to be made to your income. Based on the responses by the assessee, the FAC will then information to the and AU will prepare the income or loss determination proposal. Now, this may be forwarded to the review unit. Once it is forwarded to the review unit will review it and will then give the information to the NFAC whether there are any changes. And NFAC will pass on to the assessment unit. It can then either accept or reject that review points. In case it is accepting or rejecting whatever, it will pass draft assessment order, give to NFAC. NFAC will direct to pass final assessment order, and final assessment order will be communicated to the assessee. Are we clear? Any doubt? Any question? Any doubt? Okay. So this is how the faceless assessment scheme works. Jacob, the business hours for the survey will be the normal business hours which are prevalent according to the industry and not according to US, even if it's a US company. Okay. Are we clear about this scheme? National Faceless Assessment Center. Right? Now, whether the assessee can request for the personal hearing. Yes, the assessee can request for the personal hearing in specific cases. What are those specific cases? So you can write it down here. Personal hearing where variation is proposed in the income or loss determination proposal or in the draft order and show cause notice is issued to the assessee. Then the assessee can request for personal hearing. So at this particular stage, personal hearing may be requested. At this stage, when the show cause notice is issued, the personal hearing may be requested. And where the request is received, the income tax authority will allow such hearing through NFAC. This hearing will be conducted through video conferencing and the statements may be recorded. So, in these circumstances, any examination or recording of the statement of the assessee or any other person also has to be conducted by the income tax authority through the video conferencing only. So let's say if the inquiry is conducted or verification is conducted, and that needs to be done through the video conferencing only. Are we clear? So the personal hearing may be requested during this particular stage itself. Are we clear? Any doubt? Any question? Any doubt? Okay. One more important thing. Now, with respect to the special audit, if the assessment unit is of the opinion having regard to the nature and complexity, volume of accounts, doubts about the correctness, multiplicity of transactions, specialized nature of business activity, whatever the conditions were, may refer the case to NFAC stating that special audit may be invoked after recording the reasons in writing. Now, NFAC will forward at its discretion the reference of invoking the audit under 142(2)(a). So the PCCIT or PDGIT, Principal Director General or Principal Chief Commissioner, who is in charge of NFAC, if he considers appropriate that the provisions of special audit may be invoked, forward the reference from the assessment unit to the principal chief commissioner or chief commissioner and transfer the case to the assessing officer having jurisdiction over the case with the prior approval of CBDT. So you can write it over here. Special audit. There you can just write down the video conferencing should be granted. Okay, where AU, based on these points only, what were the points for the special audit? These points. Where the AU having regard to nature and complexity, volume, doubts on the correctness, multiplicity, right? After recording reasons in writing, refer the case to NFAC for special audit. And then NFAC, right? Where is the principal chief commissioner or income tax or principal director general of income tax who is in charge of NFAC, right? Based on his discretion, right? Forward the case to principal chief commissioner or chief commissioner or principal commissioner or commissioner of income tax, right? Forward the reference received from the assessment unit. The assessment unit will be informed accordingly and transfer the case to assessing officer having jurisdiction with the prior approval of CBDT. And once the reference has been received by the PCCIT or CCIT or principal commissioner or commissioner, he shall direct the assessing officer having the jurisdiction to invoke the provisions of 142A. Are we clear? Are we clear? Any doubt? Any questions? Any doubt? All the notices will be issued in the registered account of the assessee in the e-filing portal or through the emails. It will be sent to the assessee and all the notices will be digitally verified. Clear? Yes, Jacob, I will repeat the entire, not only review point, I'll repeat again the entire procedure once again so that, it's very much consolidated. Okay. So let's take a break of 10 minutes. We get back. I'll again consolidate everything for you and then we'll proceed on further. Okay. Let's take a small break of 10 minutes. I'll just quickly repeat for the faceless assessment. Number one is NFAC will assign the case to the assessment unit and it will issue the notice under section 143(2) to the assessee. Right? Now, once the case has been assigned to the assessment unit based on the response which is received by the assessee to 143(2), that response will be forwarded to assessment unit. If the assessment unit needs further information, it will ask the NFAC. NFAC will then again request to the assessee by issuing notice under 142(1). Right? Then the assessee will reply to that notice. Again, give all the information. Again, if the NFAC will forward to AU, AU needs further information, it will again call from the assessee, so on and so forth. In case the assessee fails to reply to notice under 142(1) or 143(2), then the NFAC will give this particular indication to AU. AU can then issue a show cause notice as to why the best judgment assessment should not be made under section 144. Based on the reply of the assessee in case he gives, or if no response is received, the AU can proceed to make the best judgment assessment. In case it's a normal assessment and now the AU needs some technical assistance, it can request NFAC to get the technical assistance from technical unit. In case the AU needs that the information provided by assessee needs verification or the further inquiry needs to be conducted, it can request NFAC to get the inquiry done by the verification unit. And based on the information provided by the TU or VU, the NFAC will pass on to the AU. And based on that, AU will conduct the assessment. Now, in case the AU feels the need to have the special audit done based on the multiplicity of transaction, looking at the complexity of the accounts, based on the specialized nature of the business, or so on and so forth. What are reasons? 5 reasons we have done it over here. What are the 5 reasons? Volume of accounts or doubts on the correctness. The AU can request the NFAC to get the special audit done. The Principal Chief Commissioner or the Principal Director General of Income Tax, who is charge of the NFAC, will forward the request to Principal Commissioner to get the special audit done, and he will then transfer the case from the AU to the jurisdictional assessing officer. So in this case, the case will be transferred from the AU to the jurisdictional assessing officer, meaning it will be the physical assessment which will be done, right? So that is for the special audit which needs to be done. In case the assessee's response taking into consideration all of that, the AU will then prepare, in case it goes under the normal faceless assessment, the AU will prepare the income or loss determination proposal. In case there is no variation which is prejudicial to the assessee. In case the additions are made which are prejudicial to the assessee, the AU will frame the show cause notice as to why these additions should not be made. This show cause notice will then be sent to the NFAC. NFAC will then send it to the assessee. At this point in time, the assessee has the opportunity to request for the personal hearing. And that opportunity will be granted to the assessee through the video conferencing. Based on the replies received or no replies received from the assessee, the NFAC will forward the replies or give the indication if the no replies are received to the AU on the show cause notice. And based on that, the AU will prepare the income or loss determination proposal. Right? Now, this income or loss determination proposal will then be shared to the review unit by the NFAC. So this income or loss determination proposal which is prepared by the AU will be forwarded to the NFAC. NFAC, if it feels that it needs to be reviewed, it can then send it to the review unit for the purpose of review. And the review unit may give the observations to the NFAC, which will then give it to again AU. Now, AU, if it wants to accept the observation, it can modify the draft assessment order, or if it wants to reject those particular observation, it can, after recording the reasons in writing, it can pass the draft assessment order. Now, after passing the draft assessment order, the AU will then share it to again NFAC. NFAC will then ask the AU to pass the final assessment order. After it passes the final assessment order, NFAC will share that copy to the assessee. Are we clear? Any questions so far? So this is how the faceless assessment schemes work. Clear? Is it clear, Jacob, now? Yes or no? Fine? Okay. Now we move on to the next important aspect, which is reassessment. Now, again, this is very, very, very important for your attempt because it has undergone the overhaul. The reassessment scheme has changed completely. So, this is something which you should be focusing on for your particular attempt. Right? Let's try and understand now. Now, the reassessment which is there, that is provided under section 147 to 151. Right? That is provided under 147 to 151. What does section 147 says? This is provided under 147 to 151. And what does it provide? Let's try and understand. So, if any income chargeable to tax has escaped assessment, section 147 provides that if any income chargeable to tax has escaped assessment, the assessing officer subject to the provisions of 148 to 153 provision of 148 to 153 assess or reassess such income or recompute the loss assess or reassess such income or recompute the loss or depreciation allowance or any other allowance or deduction for the assessment year. So, if any income chargeable to tax has escaped assessment, so let's say the assessment was done, but certain things had not come to the notice of the AO at that point in time. Or if there was no assessment done, but later on certain things come to the notice of AO, then he can do the reassessment. Are we clear? The AO may also assess or reassess. The AO can also assess or reassess the income in respect of any issue. The AO may assess or reassess the income in respect of any issue which has escaped assessment. If such issue comes to his notice subsequently in the course of the proceedings under this section. So let's say for example, there were two issues, or let's say the reassessment is based on that the expense A which is there is claimed as deduction, which should not have been allowed. Let's say reassessment is based on expense A as deduction, which is claimed, which should not be allowed, right? So let's say this expenditure was, say, additional depreciation on plant and machinery installed in office premise, which is not available, right? But for this, the reassessment was initiated. But during the course of the assessment, it comes to the notice of AO that expense B is also claimed as deduction, which should not have been claimed. Let's say this is expense which is not in nature of business or profession, disallowed under 37. So whether the AO has the power to make the addition for B, assess the expenditure B, the answer to that is yes. So that is what this particular provision says. The AO may assess or reassess the income in respect of any issue which has escaped the assessment if such issue comes to notice of AO subsequently in the course of proceedings under this section. In the course of proceedings under this section, irrespective of the fact that 148A has not been complied with. So nothing will stop the AO from assessing the expenditure B, irrespective of the fact that he has not issued the notice for the expenditure B. So if we had issued the reassessment notice only for expenditure A with the reason to believe that expenditure A has been claimed as deduction which should not have been claimed, and therefore in that particular case the expenditure should be disallowed, the reassessment was done. But during the course of assessment, he realizes that even expenditure B should have been disallowed, but he has not issued the notice for B. Will it stop AO to assess expenditure B? The answer is no. So AO may assess or reassess the income in respect of any issue which has escaped assessment if such issue comes to the notice of AO subsequently, even if notice under section 148A has not been issued for B. Are we clear? Any doubt? So this is section 147, income escaping assessment. So if any income chargeable to tax has escaped assessment, then the AO may assess or reassess the income or recompute the loss or depreciation allowance or any allowance deduction. He may also assess or reassess any income which comes to his, or any issue which comes to his notice subsequently during the course of proceedings, even if the 148A notice is not being issued. Are we clear? Now, once 147 is initiated, then there are steps to be followed. What are the steps to be followed for initiating the reassessment procedures? So, for that purpose, a show cause notice is to be issued under section 148A. So when the AO is in the possession of information suggesting that the income has escaped the assessment. Suggesting that the income has escaped assessment. So he can then issue the notice under section 148A. Now understand one thing very carefully. For the 148A, the AO has to have the information which suggests that the income has escaped assessment. So before making the assessment under section or reassessment under section 147, the AO will have to have the information that the income chargeable to tax has escaped assessment. And what does that information mean? So the information is in the nature of, just write down, AO is in possession of information suggesting that income has escaped the assessment. And what is the information? Any information as per the risk management strategy formulated by the board, by the CBDT. So any information in accordance with risk management strategy formulated by CBDT. So CBDT has certain risk parameters. Say for example, if there is foreign income, if there is transfer pricing case, or if there is sale of immobile property, whatever. So they have this risk management strategy based on certain risk parameters. The CBDT asks that if these risk parameters are identified in any case, then the case should be picked up for the assessment. So any information in accordance with the risk management strategy formulated by the CBDT. Any audit objection, any audit objection that the assessment in the case of the assessee has not been made in accordance with the provision of this section of this act. Any audit objection that assessment of assessee is not in accordance with act. So let's say for example, if the income tax department, they also do these audits to verify whether the AO has done the assessment for a particular assessee correctly or not. If not, they will ask the AO to reopen the assessment. Right? So if any audit objections are received that the assessment, earlier assessment of the assessee under 143(3) is not in accordance with the act. Third, any information received from foreign country under DTL. or exchange of information agreement. So India has the agreements with the other country for exchange of information for their residents or for the non-residents having the income in India. So if any information is received under that agreement with respect to the resident or with respect to the non-resident having income in India, then in that particular case, they can make the reassessment. D. Any information made available to the AO made available under the information collected under 133 or under 133B or verified under 133C. So any information collected under these provisions through 135A, which is the faceless collection of information, which covers 133, 133B or 133C. Then, in a case where the information is which acquires action in consequence of the order of tribunal or court, any information which requires action in consequence of order of tribunal or court. Are we clear? So then in that case, the reassessment can be done. So when the AO is in possession of any information, right? If the AO is in possession of any information which suggests that the income chargeable to tax has escaped assessment, then the AO, before issuing any notice under section 148, will conduct an inquiry. He will conduct an inquiry AO to conduct the inquiry. Then provide the assessee an opportunity of being heard by serving him the show cause notice under 148A. So a show cause notice under 148A will be issued, providing opportunity of being heard to assessee. What will the show cause notice be for? To show cause as to why a notice under 148, as to why notice under section 148 should not be issued, on the basis of the information which suggests that the income has escaped assessment. On the basis of information suggesting income chargeable to tax has escaped assessment. So, if the AO has the information in his possession, what is the information? Information in accordance with the risk management strategy, audit objection, information received in the exchange of information agreement, information made available through the information collected by the income tax department, or any information which requires action in consequence of the court or tribunal finding. then the AO will conduct the inquiry and will issue a show cause notice under 148A to the assessee, presenting him the opportunity to give the reasons as to why notice under 148 should not be issued on the basis of information suggesting income chargeable to tax has escaped assessment. Now, this particular opportunity will be granted for 7 days, not less than 7 days, but not exceeding 30 days. So, assessee will be granted the opportunity to reply. So, assessee to reply within time specified, which shall not be less than 7 days to 30 days. Are we clear? Then the AO will consider the reply of the assessee, which is furnished to the show cause notice, considering reply of assessee to the show cause notice, decide on the basis of the material available on record and the reply of the assessee whether or not it is a fit case to issue the notice under section 148. And if it decides to issue the notice under 148, it will pass an order with the prior approval of the authorities within 1 month from the end of the month in which reply is received by him, or if there is no reply which is received by him, within 1 month from the end of the month in which the time allowed to furnish the reply expires. Are we clear? So, considering the reply of the assessee to the show cause notice plus material available on record, pass order under section 148A with the approval of the specified authority. With the approval of the specified authority. And the time limit for this is if reply received 1 month from end of month in which reply is received. If no reply is received, then 1 month from end of month in which the reply, in which the time to furnish reply expires. Are we clear? Any questions so far? Any doubt, any questions? Okay. So once the AO has the information, then he can conduct the inquiry, issue the show cause notice based on the reply of the assessee and the material available on record, decide to pass the order under section 148A. And AO will then, if it proceeds to go ahead with section 147 assessment, then it will issue the notice under section 148 along with the copy of the order passed under 148A. Are we clear? So, if it proceeds to reassess under section 147, issue notice under section 148 along with order under section 148A. Are we clear? Now, what is the time limit for issuing the notice under section 148? What is the time limit for issuing the notice under section 148? So, this is provided under section 149. The time limit for issuing the notice under section 148 is provided under section 149, which is 3 years from the end of relevant assessment year. What do you mean by relevant assessment year? The year of which you are reassessing the income. So 3 years from the end of the relevant assessment years. Then in case where the AO has in his possession books of accounts or documents or evidence which suggests that the income chargeable to tax represented in the form of asset expenditure in respect of a transaction or in relation to any event or occasion or any entry in the books of account is likely to amount rupees 50 lakhs or more. So in case where the AO has in his possession books of accounts, document or evidence suggesting that income chargeable to tax represented in the form of asset expenditure, then occasion or event, entry in the books of accounts is greater than rupees 50 lakhs. Is greater than equal to 50 lakhs. Income chargeable to tax represented in the form of asset expenditure or the event or occasion or entry in the books of account which has escaped assessment. You can write here, which has escaped assessment is represented in the form of, one second. Which has escaped assessment represented in form of this. Then the time limit is 10 years from the relevant AY. 10 years from the relevant AY. Are we clear? Now understand one thing. This is the new reassessment scheme which has come up. Earlier, the reassessment time limit in the erstwhile scheme, the time limit used to be 4 years and 6 years if the income escape assessment was greater than rupees 1 lakh. Right? Now, this was before 2021, prior to 421. Now the question which arises is that can the reassessment be open for AYs prior to 2021 where the time limit of 6 years would have expired? Where the time limit of 6 years would have expired. Let's say it was AY 1230. So when the time limit of 6 years will expire, 13 14, 14 15, 15 16, 16 17, 17 18, 18 19. The 6 years would have expired there. Or let's say it's 13 14. For 13 14 AY, when will the time limit expire? 14 15, 15 16, 16 17, 17 18, 18 19, 19 20. The time limit is expired. Right? So then in that case, can I now say that the notice for 1314 can still be reopened? So proviso to section 149 provides that, what does it provide? Proviso to section 149 provides that in case where that notice under 148 cannot be issued. The notice under 148 could not have been issued at that time on account of being beyond the time limit. On account of being beyond the time limit, then the notice now cannot be issued under 148. So just because now the time limit is extended to 10 years, I cannot reopen the assessment which could not have been reopened prior to 1/4/2021 because the time limit of the earlier scheme had expired. So what does it say? Notice under section 148 cannot be issued. Notice under section 148 cannot be issued if the time limit under erstwhile provisions had expired. Time limit under the erstwhile scheme had expired. Are we clear? Any questions so far? Okay. Now, understand one thing. Here, as I said, that if the income chargeable to tax is in relation of the asset or expenditure or event or occasion which is there, which is more than 50 lakhs, right? Then in that particular case, the reassessment will be for every year where the asset or the expenditure has been incurred. Now understand one more thing. With respect to 148A, the 148A is not required where there is the deemed information available with the AO. So as I said, the note where the AO is in the possession of this information, show cause notice under 148A has to be issued. But where there is deemed information with AO, and what is the deemed information with the AO? The deemed information is if there is search conducted under section 132 or books of accounts or documents or assets are requisitioned under 132A. Requisitioned under section 132A, where the assessing officer is satisfied with the prior approval of the principal commissioner that any money, bullion, jewelry, or valuable article or thing is seized in a search under 132 or under 132A belongs to the assessee. So valuable article, money, bullion, jewelry seized under section 132 or 132A belongs to the assessee. The AO is satisfied that the information which or the books of accounts or documents seized under section 132 or 132A pertains to the assessee. So books of accounts or documents seized under section 132A or 132 belong to the assessee. Or the assessing officer has received any information under the e-verification scheme pertaining to income chargeable to tax escaping assessment. Then in all of these cases, information received under section 135A. Information is received under section 135A. Then in all of these cases, the show cause notice under section 148A is not necessary. Then 148A is not necessary. So AO shall be deemed to have the information suggesting that the income has escaped assessment. And in these cases, the 148A show cause notice is not required. Show cause notice under section 148A is not required. Are we clear? Clear? What do we mean by the asset? Asset will include immovable property, your land or building, both shares and securities, as well as loans and advances and bank deposits. So all of these qualify as asset, right? All of these qualify as the asset. So you can here write it down. Immovable property, shares and securities, loans and advances, and bank deposits. Are we clear? Clear, clear, clear. Okay. What do we mean by specified authority? So the approval is required for issuing the notice under 148 and 148A. So after approval from specified authority. Now for the 3 years, if the time limit is 3 years, then it is approval of Principal Commissioner of Income Tax, Principal Director of Income Tax, Commissioner of Income Tax, or Director of Income Tax. Right? And if it is more than 10 years, if it is 10 years, then in that particular case, the approval from Principal Chief Commissioner or Principal Director General of Income Tax or Chief Commissioner or Director General. Okay. Then the approval is required from these authorities. Clear? Any questions so far? Okay. So let's take one example to understand this. So let's say for AY, if the relevant AY is $1718, right? Then if this is the information is suggesting that the income has escaped assessment, and let's say it is less than 10 lakhs, right? So in that case, the expiry of the time limit for 1718 is 1819, 1920, 2021, right? Can notice be issued under section 148? The answer is no. The notice cannot be issued under section 148 since the 3 years have lapsed from the end of the relevant AY. So we are issuing the notice as on 1/4/22, right? So can notice be issued on 1/4/22? On 1/4/22, the answer is no, as 3 years have lapsed. What about 1819? So again for 1819, it is on 31st March 22. So answer is no, the same thing. What about AY 1920? For AY 1920, yes, I can issue because the last date will be 31st March 23. Here 3 years are lapsing on 31st March 2021. Here on 31st March 2022. Then 2021, when are the 3 years going to lapse? 24. So yes, here it can be issued. Then 21-22 is 31st March 25. So yes, it can be issued. Are we clear? Let's say if the expenditure was of rupees 50 lakhs. The expenditure was of rupees 50 lakhs for 1718. If the expenditure was of rupees 50 lakhs for 1718, then can it have been issued? The answer is yes. And in all of these cases, it can be issued. Are we clear? So this is how you have to check as to whether the notice can be issued or not. And if it is for more than 10 years, it has to be the approval by the specified authority. If it is more than 3 years, then it has to be approved by the specified authority. Are we clear? Again, the income escaping assessment would be done in a faceless manner. Will be done under the faceless manner. So the faceless assessment scheme is provided for the reassessment also. If you remember, what did I tell you here? That here the faceless assessment under section 144B also covers the assessment under section 147, right? So in this particular case, the assessment under 147 will also be covered under the faceless manner. But here, when the assessment is started, right, at that point in time, when the show cause notice is issued under 148A, or the order is issued under 148A, or the show cause or notice is issued under 148, that will be by the jurisdictional AO. Because the faceless assessment scheme for issuing the notice under 148A or under the order under 148A or notice under 148 is not specified. Only when the notice is issued under 143(2), only then it will go under the faceless scheme. Are we clear? So what happens is, once what are the steps for the reassessment? First is information suggesting income chargeable to tax has escaped the assessment. AO to conduct inquiry. Show cause notice under section 148A. Reply by assessee plus material on record, considering that, or directly let me write it like this. Order under section 148A, considering reply of assessee and material on record. Then notice under section 148 within 3 years or 10 years if greater than 50 lakh, then from a relevant assessment year. Then notice under section 143(2). This notice under 148 is issued requiring assessee. This 148, you will ask, ma'am, why we are issued the notice under section 143(2) when we have the notice under section 148. So the notice under section 148 is issued along with the copy of the order passed under 148 to furnish the return of income. To furnish return of income. Are we clear? So the assessee is required to furnish the return of income. Right? So first, the show cause notice is issued under section 148A as to why notice under section 148 should not be issued. Then order is passed under 148 considering the replies of the assessee and material on record. Then notice is issued under 148 requiring the assessee to furnish the return of income within 3 years or 10 years time frame from the relevant AY. Right? So this 148 notice which is issued is to furnish the return of income. Are we clear? And then your normal scrutiny assessment will start by issuing the notice under section 143(2) and notice under section 142(1) calling for information. Are we clear? So then this will happen in a faceless manner. This will all be faceless assessment. Are we clear? Any questions so far? Any questions? Any doubt? In case you have not understood anything, you can ask me. Okay. What is the time limit for completing the assessment under 147? So the time limit is 12 months from the end of the financial year in which notice is served. So, under 153(2), the time limit is provided for order under section 143(3). The order is always passed under section 143(3), read with section 147. Time limit is 12 months from end of financial year in which notice under section 148 is served. What was the time limit of the normal assessment? 9 years from the end of the relevant AY. Here it is not from the relevant AY. Here it is 12 months from the end of the financial year in which the notice is served. Remember this thing. In which the notice is served. For the normal assessment, it was 9 months from the end of the relevant AY. Are we clear? Are we clear? Any doubt? And where it is a TP assessment, then in that particular case, it is 24 months. 24 months from the end of the financial year in which notice under section 148 is served. In which the notice under section 148 is served. Any doubt? Any questions? Any doubt? Yes or no? Okay. So, shall we stop at this particular point of time? Okay. So, we'll meet day after tomorrow. I will be finishing off the reassessment procedure. There is important point under section 151 and 150 subsection 2, which is the exception to the time limitation of reopening the assessment. That's what we are going to do it. So that is something we will see in the next class. And then we will start with the search operations, which is under 132. We'll finish it off that. And then that will give the end to the assessment procedures. Of course, we will also look at rectification process as well. So that will then bring us to the end of the assessment procedures. Are we clear? Sure. So in case there are no further questions, we can just stop here for today. And then we continue in the next class. Okay. So thank you so much. See you in the next class. Let's close the session.